Okay, we're going to move over now into high-grade zinc and copper with Metallum Resources. They're looking to build Canada's next zinc and copper mine, and here to tell us about it is Kerem Usenmez. He is president and CEO of Metallum Resources. Kerem is a geological engineer and a mining entrepreneur with over 20 years of global experience. He's worked in various technical and leadership roles. After working with various VMS deposits and discoveries while working with Inco, Valley, and Amic, he managed a successful drilling company. He worked in numerous VMS deposits in Canada, such as Duck Pond, which is in Newfoundland, Bathurst in New Brunswick, and in northern Manitoba, mainly in base metals such as zinc. He co-owns Atom Bits, a rapidly growing diamond drilling bit manufacturer, which is based here in Canada. He's a member of the board of directors of the PDAC, is the chair of the Securities Committee of the PDAC, and co-chair of the Public Affairs Committee. Where do you find all the time, Kerem? It's really nice to see you again. How are things with you?
No, thank you. It's a pleasure to be here, and thank you for the intro. Yes, it's busy times, good times. This is the time to be busy, to be honest. I think it's good.
I think you're right. I think you're right. This is a very unique moment in our industry, and there's a lot of good we can do by delivering the metals that the world needs right now. So I'll pass it over to you, and you can tell us what you are up to and how things have been progressing.
Thank you. Yeah, I hope everyone can see now. Yeah, no, I think there are good presentations. I'm happy to be here and tell our story. I mean, today's event confirmed that we need to be more reliant on our own metal production here in Canada, so that our global reliance is minimal. So Metallum is relatively a new company. We acquired this asset from an Australian company that did JORC compliant feasibility study. It's a past producing mine. I wanted to show here that some of the infrastructure, not a lot of projects in the world have that kind of infrastructure. As you can see, the tailings dam, polishing pond, settlement pond, and actually operational water treatment plant here on the right-hand side. This was like I said, past producing mine. They mined in the 90s, about 10 years of production, about 3.3 million tons they extracted. It's an underground mine, but they closed out due to low zinc prices at the time. Not that it was all fully depleted. In fact, there is a lot more with higher grade that is sitting there, as we know today. So now that the zinc prices are high, we're looking at reopening the mine. There'll be some forward-looking statements, so I urge everyone to read, as usual. So yeah, this project is at a development stage of the Lassonde curve. When we acquired this from SGP, the Superior Lake Resources, we acquired it with equity from the previous company that we had. With that transaction, they became our majority shareholder, 65%, in fact, out of 195 million shares. About 130 million are held by Superior Lake. Most of them are still in escrow. And the other 15% is by Sprott Inc., as well as management, including myself. So the shares are tightly held. Out of 195 million, 80%, just over 80% actually, are held closely. So less than 20% is float. So that doesn't give us the trading, but a lot of upside potential here that we see in the market as we are starting. So the transaction closed about April last year, and there was a JORC compliant feasibility study that we couldn't really use the numbers as the securities looked at it as a historic. So we updated that and we published the 43-101 compliant feasibility study with updated numbers in October. So the feasibility study basically still outlines, despite the increased cost, robust economics and how attractive this project is. It's in fact one of the lowest cost quartile zinc producer in the world, driven basically by the high grade ore, because it is the highest grade zinc development project out there right now. The remaining ore, 43-101 resource, indicate that there's 2.35 million tons at 18% zinc, 1% copper, and some precious metals. What is interesting is the all-in sustaining cost, meaning the break-even cost, is 41 cents per pound. Today, it's around 165, 167, floating around. So we have a lot of room. So we are going to be somewhat protected from the volatility in zinc prices going forward. However, it's expected to go up even where it is right now. With all the demand that is expecting to be growing, especially with the $1.3 trillion infrastructure bill that just US alone that signed. I mean, there's electrification. There's so much to talk about zinc. Zinc will be the main driver in that. When I see I'm in Ontario, when I go skiing in Blue Mountain, I see all these wind turbines. I see zinc and copper in those, which we have with high grade. So our market cap, we touched a little bit, very, very low. I mean, based on the NPV, the asset value, basically, it should be 4 to 10 times. In fact, there's just recently last week, at the end of last week, earlier this week, an analyst report came out with how much more it should be compared to where the zinc market is and all that. I'm not going to go too much. I have to keep moving. So what's the opportunity? Out of 117 development assets with over 5% zinc worldwide, most of them are in difficult jurisdictions. So when we eliminated those and then the lower grade ones, and then we looked at the volume. So over 7% zinc grade alone, 10% equivalency, and 400,000 tons zinc minimum, there's only 5 development assets that fit the criteria. This alone really shows the shortage of zinc supply in the coming years. But what's interesting here is the opportunity. Anyone welcome to look into more in detail in this slide. It's on our website as well. But out of these 5, 4 of them are with multi-billion companies. So Metallum is the only one with the lowest market cap, highly undervalued. So the opportunities, it should go up from here. I mean, highest grade amongst all of them, the lowest initial capex that is required, and lowest cost to produce. So so we will basically leverage those on-site infrastructure and produce about 33,400 tons per year of zinc. This is based on the feasibility study, 1,000 tons per day. The cash cost, the C1 cost, is 35 cents per pound. All in, break even, everything included, 41 cents. And initial capex is 116 million. But that also assumes that all the equipment was purchased brand new. That's 43-101 dictates that. So with some more creative ways, we're going to reduce that. Rapid payback, it's 3 years based on feasibility study. We have a very good strategy. I'm going to talk about that a little bit, that we're going to reduce this by half. And the life of mine currently sits at 9 years, but it has a lot of potential to even increase that. And what's interesting, very, very compelling return on investment is IRR is 35% as it is. I looked at it, it's actually around 37 with today's numbers, 38. And after tax is $253 million. So it's very, very compelling. So the reason that is so attractive is partly because the infrastructure. We talked about the surface infrastructure. It's an underground mine. So we're not going to do any further surface work other than building the mill and the camp. But there's also 16 kilometers underground workings that are currently flooded. So there's an access road, 20 kilometers from the main road, main highway, Trans-Canada, and power source. Could make things very, very different when you look at it. But the power, the grid lines are on the property. They're going across the property, and there is transformer on site already. So yeah, so where is it located? It's just east of Thunder Bay in Ontario. I'm in Ontario. It makes it easier for me to get through to the project site. It's 150 kilometers east of Thunder Bay, connected by main Trans-Canada Highway. So there's a town called Schreiber, We are just 27 kilometers away from Schreiber with a well-maintained road right to the mine gate. And Schreiber has a railway station, which historically that's how they ship the ore and they concentrate. And there's a port in Thunder Bay where we could ship to Europe, but most logical one, the closest smelter is in Valleyfield in Montreal. But there's also in the United States and also in BC Trail. But even from BC, we can either ship it by truck or rail and through the port to Asia if we wanted to do. One of the first things we looked at, other than the mining aspects that I was very interested in, you know, that's my background, the concentrate. It's very clean, pretty much free from deleterious materials, and has high recoveries. In fact, metal traders and mine developers, as well as financiers, are so far highly interested in this. And so we'll leverage all these advantages, which will provide us with very small capital investment and short time frame to production. But as we move forward, we'll be leveraging, like I said, these on-site mine and near mine infrastructure. But historical operation also expedited the environmental and licensing compared to a new development project, basically. This was an underground mine, and we will keep it that way. So we're not going to disturb the ground any further than what is out there, which is on a patented land. So this makes it really relatively easier to permit. The First Nations and the local communities are in favor of this, and they're very supportive. So that also makes things pretty straightforward. We're currently doing a bunch of work. We're almost at the submission stage to get the dewatering permit. We have a bunch of permits in place: the sewage, the lakes and rivers, and exploration permit, just recently renewed it. That also shows the commitment from the local communities. And right now, the next steps will be start the dewatering this summer, as soon as we get the dewatering permit by April, May this year. So after that, as we move forward production, we're going to do some good exploration work as well. So ESG, everybody talks about it. It has always been in part of mining, but we are moving forward with that. One of the good things we have the advantage is 96% of electricity where we are is produced from non-carbon emitting resources. So even if we don't do anything and pay for the carbon credits, it's not going to be expensive, which I'm not saying we're going to go down that road, but we're looking at solar and electric fleet as well. Just on the very quick exploration potential, initial exploration potential are shown on the dashed areas. The solid colors are the known resource right now, but we're going to go after those as soon as we start construction. So there's 2 to 3 years of resource mine life expansion is very, very likely in the very short term. And there's some regional aspects as well. So right now we're going to start raising some money to finish all the work and start the dewatering. But watch out, there will be a lot of good progress. We're building not only a mine, but we're building a Canadian producer base metal mining company at this point. So it's a very exciting time for Metallum, and anyone who wants to be a part of it, I'm always available. So just to recap, one of the highest grade zinc projects in the world, North America for sure, lowest Kpax, very clean concentrate, exploration upside, and one of the lowest valuation compared to the asset value at this time. Highly experienced board. Apart from me, we have Mark Cruz, Simon Ridgway. I can go on and on, but I think we're running out of time.
Yeah, we're out of time there, Kerem. We have a lot of questions coming in for you here, so I want to make sure we have time for those.
Absolutely.
Okay, thank you for a very thorough and excellent presentation. First question here, Terry, what is the iron content?
That's a very good question. That is the only thing. It's a little bit high, but that doesn't mean that it is making it undesirable. It just limits us to be suitable for certain smelters and not to certain ones. It's between 8 and 10%. It was going up as high as 12, but that was on the Winston side. The remaining is around 8 to 10. So it's considered as relatively high.
Okay. And then also from Terry, CEZ, it's a Glencore plant in Valleyfield, and it's importing concentrate. Why not make a financing or a custom prepaid deal with them? Or are they not interested?
That's a good question. Absolutely. That's a good point. Apparently our concentrate is very, very desirable for blending purposes in that case. I believe there will be an opportunity. It's going to be a matter of time. So when do we do it? Do we do it when we have the advantage, or when do we do it when we don't have the advantage? I think it's getting there. Probably in the next little while, we'll take those conversations to the next level.
Okay. We have one from John. Is there a mill?
No, there is no mill. The surface infrastructure was all dismantled. So that will be one of the main costs that we have to do. We have to build one or find use. In fact, there's a couple that I'm looking at this moment, used mill, to reduce the cost and the timeline as well, in that sense.
Okay. And what about water levels in the mine, and how long to dewater?
That's a great question. So there's two deposits, the Winston one that was depleted mostly, and the Pick wasn't. Pick has 19% zinc that's sitting there, 1.9 million tons. So those two are connected by a internal drift. However, there's a plug in between. So hydraulically, they're separate. With the current capacity of the water treatment plant, we're going to add $0 of infrastructure to dewater, apart from renting the pump. So we will start dewatering the Pick side first, and then go on to the Winston side to dewater. The water levels recently, we checked the chemistry, everything looks good. So we're looking at 2 to 3 months, 3 months on Pick side, just over 3 months on the Winston side. But that doesn't stop us doing things in tandem.
Okay.
If that answers.
Yeah, that does. Excellent. Thank you. And just corporate strategy wise, where do you see your role in this? Is this something that you can actually see yourself taking through to development, or are you going to package it off? What's the plan here?
Absolutely. We are planning to build it. That's our focus. We are very result driven. And not only this project, but we're looking at other projects to add or organically grow this resource, or both at the same time. That's our strategy. We're going to build a mid-tier base metal company that's based in Canada, focused in North America or Americas. But like I say to everybody, my house is not for sale, but if someone comes and offers 5 million, why not? If it is something that shareholders, if that's something that shareholders will benefit, we will definitely consider.
Okay. One last one. We should have wrapped up there, but only because it's Terry. We have so much admiration for Terry Olson, one of the great analysts of our industry. He's asking, any mining challenges around ground conditions, development intensive, grade volatility, mining widths?
That's an excellent question. That's the very, very first thing I looked at, because my background is mining and rock mechanics. The rock is in the good to very good range of rock quality. So they only had some dilution and hanging wall issues on the Winston side when they came across chert. It was more brittle, but on the Pick side, it looks very robust. We did a review of the rock mechanics as well with outside consultants. So far, so good. We don't expect anything major. Obviously, once we dewater, we're going to evaluate, but shouldn't expect anything major. And it's not a deep mine. There's no stress issues as well compared to the UCS values, the high strength values of the rock. So it should be pretty straightforward.
Okay. Kerem, Metallum, that's a great story. We really appreciate you bringing it here to us today. We wish you all the success. You're so right on how this is lining up with how we're reshaping the world and what's going on and our need to secure better supply domestically. So Absolutely. You're right on point. Thank you so much for joining us.
Thank you. Thank you for the opportunity.
Excellent. Thank you, Kerem.